Gem International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show and a Happy New Year, Bob.
Yeah, let's call it good morning and Happy New Year indeed.
Bob, Canada saw an unexpected surge in full-time employment in December, 81,000 jobs added. Usually in December, it's all part-time work. BC was very strong, number one in the Canadian job market. Quebec, surprisingly strong as well. We're given one of the reasons why BC is doing well is that 40% of our exports go to Asia, where many economies are still growing. Is that a good picture or a good snapshot?
Well, it's a good number and a good event. I don't think the employment number is as rigged in Canada as it is in the United States. But, you know, this is kind of looking over a shoulder back to somewhere in May, June. There, in retrospect, there was a kind of a positive wave come in. That's the way I've been writing it for the last while. A positive wave seemed to come along, and depending on which side of the political spectrum you're on, that positive wave prompted or assisted the Brexit vote in England, where they've decided to leave the callous embrace of Europe. And then, even stretching it further, in the U.S. now, they're saying that all of Trump's pro-business initiatives are really helping things, but I think, and you know, they had a good third quarter in GDP, and that's the end of September. So I think it was the positive wave came in and helped elect Trump, and the pro-business administration is welcome. But it's already here. So I don't know how long it'll last. Some of the senior stock indexes have become overbought. I mean, the enthusiasm following the election was terrific, but it's also showed up in consumer sentiment numbers, big jumps. Car sales are still buoyant, and you've got a number of things like this that are positive, and you have to accept that. But on the other hand, fortunately, with our technical research, you can detect when it becomes overly enthusiastic, and we've had that for the senior indexes in the U.S., bank indexes, even Goldman Sachs, GS on the symbol. You had it earlier on the coal stocks, that KOL did exceptionally well. Base metal miners, of course, some of the base metal miners like Teck have coal, and that's been restored. So you've got a lot of exuberance. That was December 1996 when then head of the Federal Reserve Greenspan said that it was irrational exuberance. So the piece wrote this week, I looked around and looked at the positive things and said, well, it's exuberance and it's measurable exuberance, but let's call it rational because there are some good stories out there. And then the next question is, how long are they going to last? So one of the things that contributed to the disaster of last December, January, and into February, of course, was a tremendous liquidity problem in crude oil. And they just kept hitting the bid on crude oil all the way down to 26, which was fine by us because we were on the trend anyways. But this time now you've got a fairly steady crude oil price. We've been looking for a seasonal correction in January, but it's not happening. We also had the stronger U.S. dollar, and it became kind of overdone. It got up to 103.5, and is now in a corrective mode. So the U.S. dollar is slightly weak in January, when you would expect crude oil to be kind of seasonally weak, but of course the weaker U.S. dollar is helping crude. So we don't see anything disastrous for crude. As I said, base metal miners got overdone. The oil and gas stocks got overdone as well. Now, also there's a trick in here at the turn of the year with the small caps like the Russell, the RUT. From mid-December until about right now, that small caps will outperform the big cap indexes, and it has done it this year in kind of a choppy fashion. But oftentimes the performance of the small caps is so good it even helps the bigger market, or is reflective of a good move, which we have had. So from beginning this week, the small cap outperformance fades. It just it's there for a seasonal pop, and then it's gone. So we don't see things rallying stronger for too much. You've had the transports, for example, which were so good for us in 2015, when they began to really underperform, and then by May of 2015 it has given the bear signal on the old Dow theory, and that's what got us cautious, and also with the forecast on crude oil heading down. So that all of that culminated in January, February a year ago, and then you've had what's turning out now to be a magnificent rebound. So things are good. They can be good for a little while longer, like in the form of weeks, but the markets have earned a really good correction, and by that we sort of mean the sectors that have been hot, and nature has its way of getting these corrections in. So we'll watch and see how it does.
The Canadian Post Office said it posted its first surplus in several years. I guess charging $1 for a letter or a card probably helped.
Yeah, I didn't see that one, but there must have been some business done.
Well, plus, don't forget all the internet shopping going on.
Yeah, and there's delivery on those. So the world is always changing, and what we want to look at, of course, is the precious metals, where going back to July, when the rally, which was fabulous on the sector, became extremely overbought. So that was when we were calling for a significant correction, and it came down into early in December, and then that's where, when we started watching for a bottom, using a number of things, but one of the things is the price of the gold stocks. We use the Hoye against the bullion price itself, and for a bottom you want to have that ratio bottom, which it was doing until a couple of weeks ago, when then all of a sudden became favorable, and there was quite a rush. So gold and silver stocks are kind of overbought now and correcting. They can correct a little more. So I think the next low would be a pretty good one for the precious metal sector. And our contention is that this is a big correction within a cyclical bull market for gold mining. Now, this doesn't make us particularly bullish on gold or silver, which is the traditional thing amongst gold and silver bugs, is that they look at the Fed and they know that the Fed is practicing evil and it's going to continue to depreciate and gold's going to go to 10,000. Well, I don't buy that story at all, because we're seeing now that the Fed cannot depreciate the dollar at will. There's a whole lot of forces going on out there that are preventing that. So, but in a post-bubble contraction, usually the price of gold, no matter how it's priced in dollars or euros or whatever, does well. Put it this way, that the real price of gold does well as the cost of most commodities and energy and everything else falls relative to gold. So this then turns people in the resource business into investors, and rather than speculating in the metal, one should be investing in the shares on a timely basis based upon the real price of gold doing well, and that translating into improving earnings and operating margins and all that kind of stuff for the gold miners. So we like the sector. We think the next opportunity is close at hand, and we'll advise on that because it's within a cyclical bull market, depending upon improving earnings. As I say, it's for investors, not speculators. Speculators can try and make money out of gold, but there'd be more money made in the gold stocks. So.
We'll have more with Bob Hoye right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Bob Hoye. Bob, crude oil is still well above $50 a barrel into what they usually call the laggard season for oil. Is this going to continue?
Yeah, the correction is, there's usually a seasonal dip in January, but it's not happening because this week, for example, because you're getting a correction in U.S. dollar, and of course the main quote for crude is in U.S. dollars. So we're thinking that crude oil can trade around for a bit, but generally firm through to March. And this is also would be constructive for the general stock markets, although, stress again, they have become very overbought. So how do they get rid of the overbought? Trading sideways or trading down? Who's to say at this point? But we're talking about the transports, and they have down-ticked distinctively, weaker than other sectors. And of course this was, as I said, got us onto the old Dow theory in 2015. So we're watching the transports closely for general guidance. But no, we don't see any disasters just around the corner, but a correction for some of these equity sides that became so overdone on the upside. So.
What about other commodities like uranium? Is there any hope for that?
I don't think so. There is so much of it around. I haven't looked at the price for a few months, but I don't see anything there. There is getting a shift in sentiment from the crazy environmentalists that, after all, in producing power from uranium, nuclear power generation is really a very good way to go. But the problem is there's so many people earning a living out of protesting that the regulatory costs are just exorbitant. But, times change. People can realize that nuclear-generated power is really rather good. You just turn the switch on and leave her go. But this other business of very ambitious people thinking that solar and wind power are free, now that has got to run into a wall of practicality here pretty soon, because every time you expand capacity in either wind turbines or solar cells, you got to expand capacity either coal-fired or natural gas-fired as backup, because the enthusiasts really didn't get through to them that the sun doesn't shine at nighttime, and the wind doesn't blow all the time. So their theory that solar and wind is free is a lot of nonsense. And if you get enough engineers speaking and enough reporters reporting sound engineering, you can get this changing. And I think we're at the start of a very dramatic change whereby power was driven by passion rather than engineering. And two examples in North America that are absolutely bizarre. California, absolutely crazy about the way they get power. And then the other one of all things is the province of Ontario. They've been absolutely crazy as well. But somewhere, if their schemes increase the cost of electricity to household and to industry by, a factor of 20 times, somewhere it's going to get through to them. So in a long distance basis, you can have a correct assessment of the way electricity is best delivered, and nuclear will be one of them. But I think there's a lot of uranium around, and the newer nuclear things may not use as much. So, but if they can get rid of the regulatory hurdles, it's ideal. So the future, I think, for electricity is getting away from superstition and authoritarian control to market forces and engineering decisions, and that would be very constructive.
Bob, thank you so much for chatting with us.
Hey, Jim, good to be with you, and we're at a fun start to the year.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. If you have any questions for Bob, you can email us at info@howstreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.